Can you 1031 exchange into a primary residence property? Do you want to turn your investment property into your dream home? A 1031 exchange might be possible, but here are the rules. Can you use a 1031 exchange from a rental property into a primary residence? Technically, yes, but only if you do it the right way. Watch this video and I will explain how. Most people don't think you can do this, but there is a strategic way around it. If you're selling investment property and looking to reinvest into the next property, stick around. I'll show you how to use a 1031 exchange to legally defer taxes and then eventually live in the property later. By the end of this video, you're going to know exactly how to 1031 exchange into a property that could eventually become your primary residence. So the general rule is you can't directly reinvest into a primary residence from a 1031 exchange rental property. A 1031 exchange only applies for rental or business use property reinvestment into another rental or business use property, which is called like-kind property. A primary residence does not qualify for this rule per the 1031 exchange IRS code. The strategy is 1031 exchange into the property you ultimately want to live in, but you have to rent it out for a period of time, then convert it into your primary residence. You can use a 1031 exchange to buy a property that you will rent out. After a 2-year rental period, you can convert that property into your primary residence. So rent it for 2 years, then move into it, and now you've successfully converted the 1031 exchange rental property into your primary residence. The IRS allows this as long as you treat the initial investment as an investment property. So here's the IRS Safe Harbor Rule, Revenue Procedure 2008-16. To qualify for tax deferral, the new property must be, and here's the checklist, rented at fair market value for at least 14 days per year, held for at least 24 months as an investment property, not used personally for more than 14 days or 10% of the rental days a year during that 2-year period. After 2 years, you can move in and convert it to your primary residence. These are the technical rules for 1031 exchange. Follow them and you can buy your dream home with a 1031 exchange. Well, let's say that you lived in your dream home and now you want to sell that property 10 years down the road. What do you do now? You want to use the IRS Section 121. Listen carefully. After you converted your rental property to your primary residence, and now it's time to sell, you are legally allowed not to pay capital gains tax. And the rules here are if you own that primary residence for at least 2 years and you lived in it, you're ready to sell it, the first $500,000 of profits from the sale, the capital gains, are tax-free if you're married and you file jointly. If you're single and you file as a single person, then the first $250,000 of capital gains profits are tax-free. Now remember, you must live in the home for at least 2 out of the last 5 years you were selling it. And if you don't want to pay any tax on those proceeds, then make sure the last 2 years of the time that you've owned it were the time that you lived in it, and then you do not have to allocate any profits to the rental portion of the property. You fully qualify for Section 121 and the tax-free treatment of the capital gain. If you lived in it for 2 years and then rented it for 3 years, then a portion of those proceeds would be taxed at the 20% capital gains tax rate and the recapture rate if you utilize depreciation. So here's the summary. You can do it. You can buy your dream home with a 1031 exchange. Number 1, use 1031 exchange to buy a property. Number 2, rent it out for at least 2 years. Number 3, if you're going to use it, limit it to the IRS rules of only 14 days per year, or 10% or less of the total time that you rented the property is the amount of time you spent in the property for your personal use. Next, after 2 years, you're ready to go. You can move in and now live in that home as your primary residence. And then if you live in it for a period of time, at least 2 years out of the last 5, then a good portion or all of the capital gains could be considered tax-free profits to you and your wife. So when executing on this, be sure to use a qualified intermediary. That is someone who holds your funds when you sell your property and you're ready to exchange those funds into a new property. If you touch the money, you are disqualified from a 1031 exchange. So have your escrow company or attorney handling the sale directly send the money to the qualified intermediary. Watch the video in the comments below about how to choose the right qualified intermediary so you don't get ripped off and that person takes your money or their company goes bankrupt. Next, use a professional tax attorney that is focused on real estate. In the comments below, I will leave Mark Perlberg's information. He is an excellent real estate CPA who can help you execute on all your real estate needs. Also, remember, keep good documentation. If you're renting the property, have receipts, have records, have your rent roll, have anything that you can have to justify that you are using it for rental use. So now that you know that you can use a 1031 exchange to ultimately buy a primary residence and you know the nuances of how to do that, check out this next video. I'm going to show you what is a qualified intermediary, how do you choose the right one, and how do you make sure you not get burned if they hold your funds and they go bankrupt. You want to protect your 1031 funds. I'm going to show you exactly how in this next video. Thanks for coming by.